Hey everyone, Daniel here and welcome back to another video. BIGG Digital Assets is a stock that is down nearly 70% from the all-time highs it made just a few weeks ago, and in this video I want to give you guys an update pertaining to BIGG, exactly what's happened with the stock to cause such a substantial drop. We'll also go through updated valuation metrics and comparing it to a company like Voyager Digital. So if you enjoy these types of videos, feel free to hit that subscribe button and let's get into it. So, if we look at the chart here, 20% negative on the day here. And, this is following, many substantially red days happening at BIGG Digital for about the past month here, roughly, since it topped on April 13th. It hit a high of right around $5.05 Canadian. They're obviously listed on the OTC US exchange as well under ticker symbol BBKCF. But obviously, this stock has been absolutely decimated. And I mean, this chart only shows the high of $4.72. So technically, this thing's down, well over 70% now, which is absolutely crazy. And I just want to offer some clarity, on this channel. I'm a no hype guy. I just like to go through the numbers and give you guys my unbiased opinion as to exactly what's happening with BIGG. So the first thing we need to talk about, first and foremost, I made an analysis video on BIGG I think it's 2 weeks ago now, when the stock was, it was down pretty significantly. But one of the main takeaways that, I kind of took from that video and from that analysis was the fact that BIGG Digital Assets was trading at a substantial premium to a company like Voyager Digital. And, I did this through kind of, figuring out their potential monthly run rate or revenue run rate. And even with optimistic numbers, I got to a sense where, this company is trading at, a price to sales ratio of right around 31.2. And that's using optimistic numbers. So what I did is when I compared this to a company like Voyager Digital at the time, Voyager was trading at a price to sales of around 8 to 9. While BIGG was trading at a price to sales of 31.2. So what I said in that video is I'm not interested in BIGG because of the valuation difference with Voyager. And the thing with BIGG is that, their revenues kind of stagnated over the past 3 months. But obviously I used optimistic numbers for April. That's what we assumed we'd have a run up into April when it comes to revenue and trading volume, which we did. We'll take a look at that in a second here. But, using these numbers, I came to the conclusion that although BIGG is a phenomenal company, with a few phenomenal products that will continue to do well going forwards, the valuation doesn't make it as attractive as a company like Voyager Digital, which is what we're going to look at in this video. What is their updated valuation compared to a company like Voyager? Now, we got to look at this, guys, because this is big news. BIGG Digital Assets subsidiary Netcoins announces revenue grew 31% month over month in April of 2021. So, when I made my estimates and whatnot, judging by what we were getting from the company throughout April, I came up with a kind of a, projection that April would be a substantial month for them. And this is a little bit under what I expected. We'll take a look. This says $1.55 million in revenue. I had right around $1.92 million in revenue, a little bit more than they actually reported. So, I said in this video actually that, I'm saying $1.92 million, but if we're pricing in a bit of growth into potentially May to June, that's fine. I'm willing to pay that premium. And in this situation, it looks like that number that I actually had with that price to sales metric actually is more of a May number that, is potentially something we'll get throughout the month of May. So, it priced in a bit of growth. I'm fine with that. But, this report here, it's very impressive, $150 million in trading volume and a record, obviously, maintaining that kind of margin of kind of trading volume going down to revenue of right around 1%, big verified user and monthly account growth, obviously leading to a big explosion in monthly revenue to $1.55 million. And we can take a look at what this is annualized here. 1.55 times 12 currently puts them at right around an $18.6 million revenue run rate. Now, I don't want to use this. I don't want to use this number because I think it's unfair, especially with the fact that a company like Netcoins has grown so significantly throughout the month of April that the revenue they were generating per day in the back half of the month was significantly more than the first half of the month. So what I'm going to do for my projections rather is take the number we had originally projected. This was right around $1.92 million for the month of April. We're going to continue using this, and I also added here $1 million for Clue and BitRank. I'll cover this in the back half of the video, but this, kind of gives us a revenue run rate of right around $24 million. And what we can do is, this is obviously old news, but we can take this to the current market cap and get a proper valuation, which is what we're going to do here today. Currently, the share price is around $1. It's actually down to $1.40 now, absolutely crazy. And the fully diluted share count at the company is 247.7 million shares. So if you multiply those two together, you get a market cap right now in Canadian dollars of $346 million. Not a small company by any means. And, using that $24 million revenue run rate, you get a price to sales ratio of 14.45. So originally the price to sales ratio was over 30. That was substantial. And I said that is a big premium to pay against a company like Voyager. And now what we're seeing is a price to sales that has dropped significantly to right around 14.45. And now in this situation here, looking at this price to sales ratio, although it is a little bit better, it is still trading at a big premium compared to a company like Voyager Digital, which also experienced massive growth throughout the month of April. Currently, Voyager, with the conservative numbers that I've come up with, is trading at a revenue run rate of $630 million on a yearly basis. That's their current revenue run rate. And again, looking at their fully diluted market cap of $3.7 billion, that's a price to sales ratio of 6. Substantially lower than what we have with BIGG here. Now, before we keep going here, I want to add one very important thing. Either at a 15 price to sales ratio, BIGG is trading at an expensive level, or Voyager at a 6 price to sales ratio is trading at a cheap level. Either one will come down or one will come up. Or it can be a bit of both, where the fair value of either is placed somewhere in the middle, potentially in a price to sales ratio of 10 to 12. In my opinion, I don't think BIGG is overvalued. I just think a company like Voyager is undervalued. Keep in mind, 45% of my stock market portfolio consists of Voyager Digital stock, their shares. And in my opinion, looking at these metrics here, although I don't think a company like BIGG is overvalued, I think it's trading a little bit expensive compared to a company like Voyager, but overall, I don't think that it's overvalued just looking at that price to sales ratio. I think it's a little bit unfair to compare it with a company like Voyager, which is trading at such a low valuation. I think it just comes down to the valuation of Voyager and really comparing the two. But one of the arguments some people are making in the comment section, it's completely valid, BIGG has a lot more growth potential in the coming year. They're going to be the first licensed, I believe, crypto exchange in Canada. They're going to be expanding into the United States. They're going to be expanding into Europe. Clue and BitRank as a company, although they're not generating much revenue now, some of their competitors are worth billions of dollars. So, given that, you can expect some more revenue growth. I don't know how much you guys want to add here, but even at potentially like $60 million, this thing is still trading right in line with Voyager. And the difference between these two in this situation is that in Voyager, this is reality. This right here, this is potential. This is a projection, right? So, looking at these numbers, although BIGG presents a much better opportunity from a risk-reward standpoint now at $1.40 than it did at $3, $4, $5 per share, I still prefer Voyager Digital because of this rather similar growth that the two are experiencing paired with this phenomenal valuation at Voyager. Now, if you're invested in BIGG and you've experienced this massive drop, I want to talk to you right now. One of the worst things that you can do in the stock market is look back and kick yourself. That is one of the worst things that you can do. It's awful to look back at your mistakes and let them overtake you as an investor. It's completely awful. It's one of the worst things that you can do. It ruins your day, it ruins your mood, and it ruins who you are as a person and your mental health. So what I want you to do is I want you to look forward. So if you're invested in a company like BIGG, consider it a reset. Potentially their valuation wasn't where it kind of should have been at that time back then, trading at a price to sales ratio of over 30. Now, it's at a much more realistic price to sales ratio. The lower this stock goes, the more risk gets priced in. If you have a thesis with BIGG that they're going to be a company with potentially hundreds of millions of dollars in revenue on a yearly basis, potentially by the end of the year or within the coming years, you need to look at it from a fundamental perspective. That's one of the biggest things I can tell you as an investor is to invest in companies that you believe in from a revenue and profit standpoint. When I invest in any company, I like to look a few years down the road, 5 years down the road maybe, to get a proper understanding of where they can be from a revenue and profit perspective. That way I can come up with a potential valuation, and I know no matter what happens in the short term, I'm fine. because this company is fairly valued at so-and-so price down the road. And that's what I do with Voyager, and that's one of the incredible things that has kept me so calm and still amidst all of this volatility with the company. So with a company like BIGG, if you're invested in it, I want you to sit down. I want you to take a look at the opportunity with the different products that they offer and the potential revenue that they'll have potentially in the back half of this year. Once you've done that, come up with a proper valuation that you think is fair. I want to kind of show you guys here right now with the kind of comparison between BIGG and Voyager. Although BIGG looks a lot more expensive than Voyager right now, if you believe in BIGG and the products they're about to offer in the coming years, this revenue run rate should be very conservative. And that's one of the things that a lot of people in the comments section told me. This revenue run rate that you're using doesn't price in the potential of BitRank, doesn't price in the potential of them becoming the first licensed exchange in Canada. So great. Price this into your models. You know what? I'm going to share this document with you guys in the description down below. And if you're an investor in BIGG, I want you to take this. You can actually download the document and change this revenue run rate number for yourself. And what you're going to find out is if your expectation is potentially $75 million as a revenue run rate potentially by the end of the year, you're at a much, much lower valuation, and you can expect bigger returns from that. You've obviously got to come up with a proper price to sales ratio. I think these exchanges should be trading anywhere from the 10 to 15 range, in my personal opinion. Voyager is obviously an outlier, but just generally speaking, if there are fundamentals backing your investment, phenomenal. The short-term movement has nothing to do with the company. This report that they just released was phenomenal. It was all just a reset of valuation. So anyways, guys, thank you so much for watching this video. If you appreciate this insight, please let me know in the comment section. And yeah, I'll see you all next time.